Dear investors, we just saw the huge collapse of FTX, which was worth US 32 billion, becoming zero value in just the course of a couple of days. Now, what invaluable lessons does this collapse hold for real estate investment trust investors? Stay tuned and subscribe to our video channel as we address this issue. Gabriel, share with us the significance as well as the magnitude of the fallout and the collapse of FTX. What does it mean for the crypto market, for the Bitcoin market, for tokens like Ether and a few others, as well as actually the role of Binance in the collapse of FTX? Now, who do one actually look out to blame for in this particular episode that happened so quickly and so fast? As you can see, ladies and gentlemen, in this article, fallout from FTX crisis sends shock waves through the markets. Can such things happen in REITs or real estate investment trusts? That's naturally what people will be asking. Does it mean that it's because of crypto, or is it actually due to the volatility of Bitcoin, so on and so forth, right? But one thing for sure is the fact that if you look at uh, the article, you notice that some of the biggest investors like Sequoia, like Tomasic, yes, our Tomasic, as well as BlackRock funds have lost huge amounts of money. And people like Secure has basically started to write down the value to zero as well as a few other funds. It's left to be seen whether Tomasic will actually do that. Now, the second slide, ladies and gentlemen, if anything, one lesson number one to take away from this is that yes, ladies and gentlemen, for those who are born in my era, yeah, that is actually the picture of Jerry Lee Lewis. He basically made popular this particular song called "Great Balls of Fire." Now, ladies and gentlemen, when it comes to investment, we don't play with great balls of fire. We specialize in real estate investment trusts because they're conservative and they basically are steady growers of your wealth so that you can maximize your wealth. Now, essentially, one of the key things is that FTX as well is something that is actually an unregulated platform. When you have loose regulations or maybe very little regulation as you see in FTX, the ability to issue their own tokens, that's FTT, their ability to actually then extend to their related company, the Altameda Research, which is basically a hedge fund run by the same founder, then you essentially have a lot of corporate governance issue. Of course, all this, was something that we highlight in our classes on real estate investment trust. We will analyze the dues and the framework. So, if anything, the fallout FTX serves as a good reference of what REITs should not be doing at all, so that they can continue to deliver steady wealth for you. Hey Gabriel, in previous videos you have shared with us that some REITs, for example like Manulife, Digital Core, as well as Prime REIT have actually lost as much as 40 to 50% of the value in this current market sell down. So a possibility of 100% wipe off is there possible in real estate investment trust compared to what happened to FTX. It says that Singapore investors, basically in bankrupt FTX, are resigned to losses. In fact, the losses are huge. So lesson number two, ladies and gentlemen, is that you can lose huge amount of money. Wow, how how huge an amount of money? Well, look at the next slide. The next slide shows you that Forbes actually reported that Temasek Holdings lost or rather invested in 205 million, in bankruptcy cryptocurrency exchange, that's FTX. So translate in Singapore dollars at current exchange rate, we're talking almost 300 million loss. Ladies and gentlemen, this is a huge amount of money. For real estate investment trust, it's different. So for example, yes, some of the REITs like Manulife, Prime, and Digital Core have lost 50% of the value in this current sell down. But a REIT is as good as the assets that they own, which is something that we have talked about in both my book as well as in my various REITs quarterly classes. The next of which is on the 26th of November. Yes, that's next weekend. So hopefully many of you can join us and quickly subscribe to actually enjoy the early bird special before the early bird special rate runs out. So in our classes, we're going to talk about why real estate investment trusts have the ability to bounce back. In fact, we're going to address which are the ones that are likely to bounce back so that you can actually have the potential of actually recouping some of the losses, even though if you have invested in the wrong REITs. But of course, if you have been attending our classes for the last 33 years that we've been teaching, then you will not have landed in the wrong REITs in the very first place. So, second lesson number two from FTX is that in FTX cryptos, Bitcoin, you can lose big. And how big is big? Just look at domestic losses. Whereas for REIT, a real estate investment trust, investors is a different kettle of fish. Investors are protected to the extent of the value of the assets, provided, of course, the REIT is well managed. To in terms of basically their wealth restoration. So, what other lessons are there in the fallout of FTX for real estate investment trust investors, Gabriel? Well, this chart shows the 10 worst performing REITs, from the high when the REITs actually hit in April and March to the current October 2022 low. So you can see that some of the worst performing REITs like Digital Core, Manulife, and Prime. These are actually REITs that we have highlighted way, way before. They have actually underperformed for this year. If you'd like to, please check our book, which we recommended and talked about this 3 years ago, as well as our various YouTube videos, as you can see. If you run through down the list, you'll notice that essentially the likes of Daiwa House as well as EC World REIT will avoid. Cromwell REIT again is another REIT that we have actually advocated and avoid all these years. So you can see for real estate investment trusts, you are able to actually pick those underperforming REITs way, way in advance. Of course, what are the ingredients and the traits to be looking out for? This is something that we share in our investment classes. Whereas for the likes of cryptos, for the likes of FTX, unregulated exchanges, platform, you basically have a case where you can lose big even before you know what happened. And again, in the Sunday Times article, it's mentioned that it's very ironical that most Singaporean investors lost money simply because the other competitor, that's Binance, was not able to obtain a trading license in Singapore from the MAS, and therefore have inevitably shifted their trading operations of crypto into FTX, and that's how they got into trouble with the collapse of FTX, and that's how they lost a lot of money. Once again, the other thing, of course, is that in the for real estate investment trust, again, if you look at my interview on Business Times on the 20th of September, you notice that I was able to say that, look, if you look at the pink one that's actually being underlined here and shared here, you notice that, just to quote, okay, now we are finally getting into a very blurred on the street situation for REIT investors and traders. And guess what? One day later, the market for REITs bottomed on the 23rd, 21st of October. Right. Now, you may ask, how can we be so prescient and accurate? Now, it is actually not due to luck, ladies and gentlemen. It's due to many years of conscious study, following up, and always redoing, reassessing, and redesigning essentially what we've learned. Because from there, the discipline to actually instill knowledge into our real estate holdings, seeing every deal that the real estate investment trust actually do to actually see whether they facilitate growth in DPU would be able to help us to identify winners and losers way, way before they become winners and losers. And this is something that we share in our investment class, the next of which is actually next Saturday, which we hope you can join us by signing up in our GCP Global webpage. But Gabriel, I thought FTX was actually marketed by sports stars like Tom Brady and Steve Curry, from national basketball superstars to American football players. How is it that essentially they got into the wrong bait with FTX? Yep. The moment any investments is too high profile in a very short period of time, can you just imagine FTX was zero 3 years ago? Nobody heard of it. At its peak, which was just a couple of weeks ago, it was actually valued at $32 billion. Okay, and Tomasic actually reportedly by Forbes, okay, got in at the funding round about 25, 26 billion. Already the price has surged at that much, right? So yes, coupled with all the allure, you see that essentially you have football stars, national basketball players like Tom Brady and Steve Curry marketing for them. They even bought time for the Super Bowl timing, which is actually very expensive. So once again, if you like to, you can see our monthly article in GCP Global website, where we always share what we teach in our REIT classes, where we actually formalize a disciplined approach in picking up stocks, so that you will be able to identify, as what Mark Cuban and other good fund managers say, some of the dumbest shit ever, right? So this is a very interesting one. Do read what he says. That for example, he says that buying metaverse estate is the dumbest shit ever right now. There are always so in our classes on 26th, we are going to talk about some of the dumbest shit, in the real estate market. So once again, thanks for watching this week's um, video. Give us a thumbs up, subscribe so that you'll be notified, and hopefully you can join us for our class next Saturday. Till then, next week. Cheers.